Welcome to Share Talk, the only podcast where investors come first.
Today we have Lincoln Moore, Executive Director of DekelOil, which is an AIM-listed company on the London Stock Exchange. The company released their interim results today, which we can hopefully go into more detail with. But first, morning Lincoln, how are you?
Hi, good morning Rob. Very well, thanks.
Good. It's been a challenging 6 months, it seems. Can you run us through the results and some of the key drivers?
Certainly, yes, that's a fairly true statement. It's certainly been the macro conditions really this year have been almost all against us. I mean, I'll just run through them all and then focus really on the ones which I think matter the most. But of course, we entered this year's high season with quite strong expectations of further fresh fruit bunch growth on the back of the being pretty strong market the previous year, and of course increased the size of the mill and we started the year quite strongly in January, and we just, I think I've said it a number of times before, we just didn't see the growth in the fruit that they would expect. It was a very down year for fruit yields in the country and specifically in our region, and really what that sort of led to is, by I guess mid-February, the other millers as well as us became aware of this, and then you of course have a situation where typically competition for the fruit in the high season is not tremendous, but it was significant this year because everyone realised that the fruit was lower, and this is the time of the year when the most fruit's around. So there was a heavy increase in the prices of the raw materials, and then I guess when you couple that together with falling crude palm oil prices and the strengthening of the euro against the US dollar, which is the US dollar is the price palm oil is set at, converting to lower amounts in euros, which is effectively our currency of trade. You've had a combination of pretty terrible factors working against you. I mean, it's not complicated in terms of understanding the financial outcome. It's all the action is above the gross margin line. And really the main driver, because let's not forget, we've had weaker pricing environments in the past, and one of the, typical advantages of our business is that the fruit, or our major cost being the fruit, is linked to the crude palm oil price. So typically, if palm oil prices come down, we pay less for the fruit. So we do maintain that sort of semi-fixed margin. But obviously this year, just with the very strange conditions of lower yield, that sort of statement didn't hold true. So if you're looking at the gross margin percentage, down from typically 26% down to 15%, it's almost entirely related to paying more for the fresh fruit bunch, which is about 70% of our cost above the gross margin line. And then of course, there is also with the palm oil price down, some other issues which reduce the gross margin, because some of the other costs in that, particularly transport, are fixed. So you don't pay less for transport just because the crude palm oil price is lower. So of course that cost becomes relatively higher in terms of the overall situation. So yes, crude palm oil prices didn't help, but the main thing was just weak fruit levels, which brought up our main cost, which is the fruit, way higher than what would be typically the case.
Okay, and would you mind explaining the decision not to pay out the dividends this year?
Yeah, so obviously we entered a program of what we expected over time would be a gradual progressive dividend, and the intention was 2 or 3 months ago to maintain that. We saw shortly after announcing it that the international crude palm oil price was dropping lower and lower, and just really to touch on what's going on there. There's quite a bit of structural interference at the moment in terms of international crude palm oil prices. You have India, which increased its tariff on CPO very early in the year from 10% to 40%, and it's still holding to protect its own soya market. You've got issues between US and China in terms of tariff wars, and which is creating speculation of high levels of soya on the market, the main substitute for palm oil, which obviously decreases the price of both of those products together, and very recently some very strong weakness in emerging market currencies. And India is an example. Countries which buy palm oil obviously have less buying power with a lower exchange rate. So the prices, it got down late last month to lows of the last 10 years. So all palm oil companies would be suffering tremendously at these levels, and we don't expect those levels can be maintained in the medium term. We expect to see some rebound, but we obviously waited as long as we can to see some of this play out, and with the goal of obviously trying to maintain the dividend, and for that reason we deferred our announcement of the notice of AGM, which I think now will obviously go out imminently, to give it every chance of getting to a point where it was sensible. But for us at the moment, we as a board have made a decision that it would not be the appropriate thing to do to be paying out a dividend in such weak external market conditions. So it's on hold. It remains clearly part of the strategy moving forward, but certainly maintaining cash, preserving cash to allow us to enter next year as good as possible, as well as investing for growth is had to take priority at this stage over the dividend.
Right. So you said it's been a bit of a strange year so far. Any comments on the rest of the year and what you foresee in the year to come?
We have, our Q3 numbers will come out in early October, and we have seen some normalisation, and we feel that this issue of the fruit being lower during the high season is certainly an anomaly. There's a number of reasons why we support that situation. One, of course, we have our own estates, and we can see that they're well off what they would normally be yielding at this time of year. So we can match the smallholder fruit volumes against our own estates. We also, the country publishes the smallholder and company estate production levels, and a number of the main companies, including ourselves, publish that data. And it's, I've got that data back to 2012, and over the last 6 years, we've either seen each year an increase in the smallholder fruit volumes or stabilisation. And this year it's across the board 20% down. So it does feel very much like it's an anomaly. If you talk to the agronomists, the technical experts, they're referring it to it as a rest year. It was a relatively strong fruit year last year, and this year is weaker. And typically that means that the following year is a lot stronger. One of our non-executive directors, Bernard Francois, was the former CEO of PALMOIL, which is a 300 million market cap palm oil company in Côte d'Ivoire. He saw this back in 2010 was the last time this took place, and then 2011 was very strong. So there is a strong optimism that the fruit levels will either return to normal or grow next year, which should alleviate all that pressure that we saw on the raw material prices, and see our gross margins return to typical levels. So I think, we'll put our Q3s out soon. I think that's going to show people that this is this supports the case that this is just a one-off weak high season, and then we'll make sure we're as best prepared as possible to take advantage of what we expect could be a very strong high season next year.
Okay, you said be prepared, and I think you've sort of answered the next question I'm going to ask, which is, what are your plans for maintaining and improving future production levels?
Yeah, of course, there's things you can control and things you can't control. This year, what we couldn't control is the volume of fruit overall was so down. So inevitably you're going to be impacted. And I think in terms of just natural fruit levels, we expect those to be back to normal or higher next year. So that will naturally be part of the improvement. It's clear we're maintaining at least our market share. So really it's a case of things we can do to defend and to improve our market share. We're looking at possibly another logistics centre and some other initiatives to deepen the relationship with the small farmers and offer them things that others perhaps can't. I think it probably is slightly commercially sensitive to go into too many details on that, but we're making moves to enhance our market share. But looking back or stepping away from the short term, we know from our nursery, of course, we've sold 25,000 hectares equivalent of plants to small farmers in our region over the last 6 years, and we're not the only nursery. So this is material planting and replanting that's gone on over the last 6 years. So we still see that there's going to be, at some stage, a very sharp, we think, quite a big uplift in the fruit levels, which has always been the plan to start moving our mill towards its capacity. So this year we're probably only operating at 50% of capacity. So there's huge organic growth to come. And we have to make sure we maintain or increase market share and the fruit volumes overall increase.
The last time we talked, you were talking about the Cashew Project being, it seemed like a good asset. What's the latest on that, and what are the next steps?
Yeah, the situation with the cashews, of course, myself and Shay Cole joined the board, and we've worked with the team and bring in what we believe are tried and true key management on the general management side, on the engineering side, and the agriculture side. So the team is, we think, proven and very strong. It's an execution or construction phase process that will begin shortly. So the key contracts, which are very close to finalised, is the acquisition of the mill. I can't go into too many details, as again, commercially sensitive. It's going through final approvals with the banks. It's always a condition of the banks to approve the asset and the contract that they're effectively lending against. And then the infrastructure work contracts are well advanced as well. So I expect very shortly that will be put into the market, and will sort of set out a clearer pathway to first production in the back half of the last part of next year. So I think it'll be very clear shortly. Clearly, we rate the cashew processing space. It's something we think has high gross margins than the palm oil space. Of course, it adds to our overall volumes for our business revenue, and allows us to leverage our fixed cost space better. So we still think it'll be we think it'll be a very significant asset in time that will come into the DekelOil group.
Okay, as a significant asset, do you see the Cashew Project overtaking the palm oil projects in terms of generating cash?
It appears so. I think the initial mill size at 10,000 tonnes lends itself to, that's 10,000 tonnes of raw cashews, lends itself to a revenue line of somewhere between 20 to 25 million US. So at that point, it would be, I'd expect, still smaller than DekelOil's existing palm oil asset in a normalised year by some distance. But the plan is to increase that mill to 30,000 tonnes, and at that level, we expect it'll be significantly greater. Perhaps no, maybe revenue-wise, 50 million versus maybe 40 million, which we think the palm oil can easily get to. But the gross margin line will be materially higher. We expect, so it'll be significant when the two assets are together. And I think the market caps we're looking at today will it's worth investors who are probably looking at the opportunity to buy us on the cheap. You can see what the potential upside is for a processing business and a logistics business, which in all intents and purposes is the main thing we do, is really significant at these levels.
Last question then. What do you expect the next bit of news to be?
Well, I think it's important to make sure that we answer all shareholder questions, and so we're talking to the institutions who understand very well the growth plan we're going through, and also to the retail investors as well. So we're offering again an opportunity on Tuesday for us to run through those results, similar to what we did for the full years, and answer questions. Clearly, looking at the prices at the moment, people are very focused on the immediate term, and probably have lost a slight bit of focus on the medium term, which is partly understandable. And hopefully, I think the next announcement will be Q3 production numbers, that will alleviate some of the concerns that this drop in fruit is not a permanent one. It's just been a weak agricultural yield period. and we'll start moving back to traditional periods. And of course, we were growing quite nicely, and not probably the pace we wanted, but profit and revenue was growing year on year. So we've taken a hard hit this year, but the overall strategy and the group is moving in a very interesting direction. So I think the key threes will be next. We'll imminently announce the AGM details, and I think we're very close to putting some updates in terms of the Cashew operation shortly as we move towards the end of the year.
Right. Well, it's been good talking to you, Lincoln, and we'll see what happens with the Cashew Project. It sounds exciting. So thank you for taking the time with us.
No, thank you. Thank you very much, Rob.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.